Good day, everyone. David Paul speaking. I'm the Managing Director of VectorVest in the United Kingdom. That's me. I've been trading in the stock markets of the world since 1982. I put on my first trade in October 1982, and I've been trading pretty much on my own ever since. I worked until 1988 for a large company, and in 1988 I cut the corporate umbilical cord. I've been trading on my own ever since. For the last 7 or 8 years now, I've been helping retail traders improve their performance with the VectorVest program. Today I want to talk about 8 tips that I firmly believe that if you put these into place, you can become a much more consistently winning trader. So let's get on. The very first, tip number 1, how much money's in your account? Now that may seem obvious, but I assure you, as I go around the country and ask many people, how much money are you managing in your speculative trading business? They haven't got a clue. I also find this at the institutional level, where I speak to a youngster at a bank and I say, well, how much money are you managing? And they haven't got a clue. And we've normally got to go up 2 or 3 levels in the management chain before we can actually find out how much money this youngster is managing. Ladies and gentlemen, if you don't know how much money's in your account, you can't size your positions correctly. And if you don't size your positions correctly, you're gambling and not trading. So the very first thing that you need to do is to think long and hard about the amount of cash that you wish to use for your speculative trading business and manage that well. Tip 2 and tip 3. Ladies and gentlemen, never lose any more than 1% of your account on any single trade. So for example, if you decided that you want to capitalize your speculative trading business with £40,000, for example, 1% of that would be £400, and that means that you should never lose much more than £400 on any one trade. Practically, I suggest that you divide your capital up into 10 pieces and then vow never to lose any more than 10% of any piece in any single trade. Now, on the VectorVest program, we have a 5-video course built into the program. It's called the Successful Investing Quick Start course. And in lesson number 2, we go into a lot of detail on how to go about position sizing. Risk management, ladies and gentlemen, is the difference between winning and losing, between living and dying in this business. Tip number 3, spread your investments across the market. Try not to have any more than 2 positions from any one sector of the economy. Sometimes that's easy to do, sometimes very difficult to do, I know. Way back in 2010, 2011, pretty much the only thing in the UK that was rising was building stocks. So at the moment, a lot easier to do. Tip number 4, never allow a decent profit to turn into a loss. So the first thing I suggest you do, folks, is that on every position you have, you need to have some form of level where you say to yourself, this just isn't working. VectorVest calculates a stop loss for every share in the market every single day. You could use that, and it's a really good stop loss. It's adjusted for volatility. It keeps your stop loss well out of the traffic, out of the noise of the market. What I suggest you do is that when your position moves your way and you've made as much as you've initially risked, get the stop to entry and then let the second half run. So let's put some numbers to that. If you buy a share at £10 and VectorVest calculates a stop loss at £8.50, the initial risk is £1.50 per share purchased. if the share should fall from £10 to £8.50, that loss should in fact be 1% of your account size. It should be around that £400 of a £40,000 account. Now, if the share moves your way and it gets to £11.50, we've made as much as we've risked. I suggest that you bank half, get your stop to entry, and then trail a stop loss up the page behind the price to lock in profits. And this ratchet allows the price to move your way, but in fact, if it pulls back, will get you out of the market and lock in those profits. And on the VectorVest program, we have several methods of trailing the stop loss, including a novel method based on volatility, which we call the profit locker, which does a really, really good job in locking in open profits. Tip number 5, trade in the very best shares. These alone will help your portfolio do well, and it's exactly the same as a football team. If you fill your team with really great players, that on its own will help the team do well. At VectorVest, we believe that those shares should be undervalued by the market and growing earnings strongly. Warren Buffett's mentor, a gentleman by the name of Ben Graham, says that earnings per share growth is the engine that drives the share price. And in this chart, I show you, this is my standard layout for shares. I think the price is moving up the page in that candlestick format. Now, in the window below the price, I have earnings per share. And I like to see earnings per share growing as linearly as possible over the last year. And it's this earnings per share growth, ladies and gentlemen, that's driving the share price. Now, I don't have to sort of drudge all over the internet and through 2,000 odd company reports to find earnings per share. VectorVest puts that together for me automatically. The second thing that I want to see is that I want to actually see that the share is showing some value. And the green line, the thin green line above the candlestick plot is in fact the VectorVest calculated valuation. And we calculate a value for every share in the market every single day. And I want to favor undervalued companies. I did a webcast a little while back for my colleagues in the US. And in the webcast, a young man said to me, I'm going to buy this share now, win. And he was a technician. And what he'd done is that he'd drawn a trend line down here. And the trend line had broken and the candle had pulled back and kissed. And that's a very common technical entry point. He also said that there was a double bottom down here. So we had a double bottom and a break, and what technicians call a break and a kiss. So he felt that that was a really good place to get on board. When I actually looked at the VectorVest calculated fundamentals, I got a completely different picture. Here's what it was saying. The share was significantly overvalued, and earnings per share was falling off a cliff. So I felt that the chances of this being a successful reversal were slim, and I told him that I didn't think it was a good idea. And that's what happened. So finding shares that are undervalued, that are growing their earnings strongly, will help you do well. Earnings per share growth is the engine that drives the share price. Tip number 6, never buck the trend of the share. Buy shares that are rising in price and not falling in price. Now that may seem simplistic, but I assure you that there is an ego within us all, and that ego wants to actually predict a bottom. Paddle with the stream. In Chicago, in the pits, I worked there for a while. They say, top and bottom pickers become cotton pickers. Never forgot that. I'm not saying for a second that you don't buy a pullback and a strong trend, but I want to see a share that's rising, not too volatile. Here's a little test for you. Done this many times in live workshops and in webcasts. 3 shares. Those are all candlestick charts over a year. 1, 2, and 3. Which one would you pick? Well, number 1, the share price is falling. Is this a bottom? Who knows? Who knows? Share price number 2, well, I suppose in theory you could have bought there and sold there, and bought there and sold there, but anybody that's had a go at it will know that it's an awful lot more difficult to do on the hard right edge than it is in hindsight. Now, share number 3 is moving up the page, not too volatile, and really all you had to do was to buy these breakouts. Okay. I'm not saying for a second that you don't try and buy the odd pullback, but we've got a trend. Markets making rising bottoms up the page, and it's relatively easy. Paddle with the stream. And in the next slide, I've got a very simple stock buying checklist, which keeps my investments on track. First of all, the stock price is steadily rising, not too volatile. The share is doing what I want it to do. The company's making money and growing their earnings, and I want to favor undervalued stocks. A mix of fundamental analysis and technical analysis. Tip number 7 is a big one. Never buck the trend of the overall market. Ladies and gentlemen, there's a great time to be in the stock market, and there is an awful time to be in the stock market. And we need a simple and an objective way to tell us when it's safe to be in the stock market. Now, the chaps on the TV will say that you can't do this. And maybe with billions in a fund, that is in fact the case. But very few of us are managing billions or even millions in our ISA accounts. So, ignoring market direction is fine if you've got 20 years to wait. Markets are like roller coasters, like a fairground roller coaster. They take years to get up there, and they fall very quickly indeed. Now, for a very long time, I used moving averages on the indices to time the American stock market. 50-week moving average on the S&P 500, and it didn't do a bad job, but because markets take a very long time to get up, the entry signal from the moving average is good, but the exit signal was invariably far, far too late. And that's because by the nature of the calculation of the moving average, it's lagged. At VectorVest, we have several methods of market timing. Short-term methods for swing traders and spread bettors, and longer-term systems for position traders. And I'm happy to tell you that since the 5th of October 2018, VectorVest was saying that we should not have been in the stock market, that it was not a safe time to be in the stock market. And that clocked the 3-month fall at the end of 2018, which has been the biggest pullback in stock market since 2008. This is what happened. This is the sell-off from 2000 to 2003. This is the global financial crisis, and since I've done this chart, this is pulled back a little bit here. That's the Euro crisis. Folks, we need to have an objective method that tells us it's safe to be in the market here and safe to be in the market there and well out of it here. And those of you that lived through that period will know that the average mutual fund in 2007, 2008 to March the 9th, 2009 fell by 40%. And if something's down by 40%, you've got to do 60% footwork to get it back again. The last tip, ladies and gentlemen, always invest in liquid counters. If you can't easily exit quickly, then it's difficult to practice risk management. And as I said earlier, risk management is the difference between winning and losing, between living and dying in this business. And on VectorVest, in my uni searches, where I look for shares that are undervalued automatically, shares that are growing and earning strongly and safely automatically, that are rising, I always add a volume filter where I like to see the 50-day moving average of volume to be above 100,000 shares, and that eliminates shares with poor liquidity. At VectorVest, we firmly believe that every investor should know what a share is really worth, how safe is the earning stream, and should we be buying it, should we be selling it, or is it going nowhere? We want to find undervalued shares that are growing their earnings safely and aggressively, that are rising, and we want to buy them when the general market is rising. And that process we've automated on the program so that you can keep it under control in 10 minutes a day. There should be a big button in the email that you received, and if you're interested, I'm more than happy to offer you a 30-day trial of VectorVest UK and USA, and that is a nominal price of £5.95. That includes Successful Investing Quick Start course. If you have any questions for me, you can find me at david.paul@vectorvest.com. Ladies and gentlemen, it's been a pleasure to talk to you. And just remember, don't make it too complicated. Undervalued shares that are growing their earnings strongly, that are rising when the general market is rising. And the only thing that we've got to bring to the party is the discipline to sit and wait until we can tick all those boxes. And as I say to the VectorVest subscribers at our user groups around the country and online, doing nothing is much more difficult than it would seem. Nevertheless, we need to find that discipline to tick all the boxes where we can push the probabilities of success through the roof. Have a great day. Bye-bye.